Hello everyone. Today I decided to do a quick review of altcoins. We'll take a look at about 5 to 7 cryptocurrencies. And let's start with Bitcoin, which we're expecting to rise to around $94,000 to $96,000 and potentially even above $100,000. And I should mention that Bitcoin has already climbed to around $92,000. Take a look at the chart. We looked at the 4-hour Bitcoin candles in the previous video. I told you that this green 50-period moving average has already been tested. This means that this approach could end with a breakout and a move, first of all, towards the 100-period and also the 200-period moving averages. Because after numerous tests, it often happens that the green 50-period line gets broken through and we head straight for the red 100-period moving average, and immediately the orange 200-period moving average. Will it happen this time? I don't know. All I know is that we have two potential scenarios, or rather, Bitcoin has two options. The first is to go straight up here, and the second is to drop lower and still head here because the weekly candles still suggest growth somewhere into this area, around $100,000 to $102,000. That's all for Bitcoin. We're done with it. I just want to say that there is a fairly likely scenario in which we will see another local wave of decline to the area of $87,000 to $87.5 thousand, followed by a move upward to the region of $100,000 to $102,000. Now let's move on to altcoins. And these are my indicators. Let me remind you once again what some of them mean. Rectangles. The turquoise and green ones indicate growth targets. I call them mathematical growth targets. They are calculated using specific formulas. And the red indicator is an overbought, oversold indicator. I wrote it myself. You won't find it anywhere else. It shows how overheated the market is. Accordingly, when it is in the area of this upper red band, it indicates that buying here is risky and the price may reverse from top to bottom. If it is in the green zone, then accordingly, a reversal in the opposite direction may occur. The key points on this indicator are its inflection points. That is, where it was moving up and then starts moving down, that's where an inflection occurs. This is a potential trend reversal point. Potential. I also want to mention that these turquoise targets, unlike the light green ones, are stronger and are reached with a higher probability, at least because they are as a rule, they are closer because two growth targets, the turquoise and the light green, can appear at the same time. There are other indicators, but I won't focus on them now. Let's just do a quick analysis of some altcoins, starting with Ethereum. Here I have 5 time frames: hourly, 4-hour, 12-hour, daily, and weekly candles. Notice here we observe a break in this red indicator, which suggests that the upward movement may continue, but we don't have any engulfing patterns on the weekly candles. Therefore, this is nothing more than an assumption about a potential reversal. Here the indicator is pointing strictly upward, along with the price, and we have a growth target. This suggests that Ethereum is very likely to reach this target, at least its lower boundary. That level is $3,195. Approximately, the upper boundary of this target is $3,300. Yes, there are other targets. Here, a target was missed. Ethereum could also return to it around $3,950. But I wouldn't talk about it right now. The 12-hour candles are currently pointing exclusively upward. They are moderately overbought. Nevertheless, we don't see a reversal on this lower indicator. And we see that the price is also moving toward its nearest target of around $3,100. And the higher target is $3,300. The 4-hour candles indicate that the market is extremely overheated. And we could very well see a move downward to where? Right around this line here. Let me mark it with some drawing tool. So we might see a move here of this kind, with a continuation upward as indicated at least by these daily candles. And this is the growth target. And finally, the hourly candles have two downside targets at once. 1, 2. The indicator is pointing strictly downward, so that's the kind of arrow we ended up with. Well, it's not much of an arrow, but it doesn't matter. You get the idea. So at the moment, let's say, there are risks of Ethereum dropping to around $3,000. $2,950. That's it for Ethereum. Let's move on to Ripple. XRP. Here on the weekly candles, we see a potential reversal, but it's not happening from the green zone. That's not good. This suggests that it could be a false reversal. Nevertheless, we see that the green 50-week moving average has been broken and the price could rise to around $2.50 per Ripple. and this still won't be actual growth. It will just be some kind of correction afterwards. A breakout of the 50-week moving average with a potential move to around $1.60 and even to the $1 area. The daily candles also indicate that there is a growth target of approximately $2.34 to $2.39, and it is very likely to be reached. Look, there was one target and it was reached. Then there was a second target and it was reached. Now here is the third target. This is not a guarantee. Under no circumstances should you rely solely on any one indicator, whether it's mine or someone else's. But it is a probability. I told you that we would set some priorities and potential target levels. So that's what we're doing now. The 12-hour candles indicate that Ripple is in an overheated zone, and it could very well make some kind of local correction. For example, to the middle of this large green candle, if you can make it out here. That's the $2.10 level. And finally, the 4-hour candles are clearly pointing down, both here and here. And they indicate that Ripple could go not only to $2.10, but also to around $2.05 or even $2, and the hourly candles as well. Here, the direction is downward. The candles are pointing down. At the moment, 5 minutes before the candle closed, the 50-hour moving average was broken. This means that $2.15 and even $2.08, the 200-hour moving average, are quite achievable levels. So for both Ripple and Ethereum, we are already seeing a local decline with a subsequent move higher. Let's move on to Tonecoin. What do we have here? The weekly candles currently suggest possible growth, but this is unreliable because we need to see at least this red candle get engulfed. The daily candles clearly indicate growth. For what reason? The lower overbought indicator is showing positive dynamics. The candles are also pointing upward. There are two growth targets. One is weak, the other is strong. The strong one is turquoise, the weak one is light green. And we have, which is very important, an engulfing of this candle from November 21st. It set a new low, and on yesterday's daily candle, we fully engulfed it. And this means that we have a bullish engulfing, and the trend on the daily candles has formally changed to an upward one. Its targets are, first of all, the base of the candle from November 20th, which is about $1.73. And then there are my mathematical targets, according to my indicators. The 12-hour candles are pointing upward here and here. The word take is written here. And it indicates that the trend might reverse at this point. It might be worth locking in your position if you were in a long. Nevertheless, we have two growth targets. Here they are. The first one is around 1.675 cents. 1.72. The second is 1.85, 1.90. Well, at the very least, we'll most likely reach the nearest target, possibly after a local correction. On the 4-hour candles, notice that the lower indicator has turned and is now pointing down. And this suggests that we could drop at least to around here and test this 50-period line near the level of $1.56 to 57 cents. So right now, there are fairly high risks of a local decline on the 4-hour candles. On top of that, we also had a bearish engulfing pattern. The candle that set a new local high was engulfed by a red falling candle. This again points toward a decline. And on the hourly candles, we also see a red candle, and the indicator is pointing down. So here too, there's a slight indication that a correction is possible. Should you short right now? I think not, because that carries significant risks. Because the daily candles are unambiguously pointing toward continued growth. And some local fluctuations are not out of the question. But overall, the expectation is that the upward movement will continue. Let's move on to the next cryptocurrency, AD. So what do we have on the weekly candles here? There hasn't been any reversal here. There's absolutely nothing indicating growth at all. So the daily candles. On the daily candles, just like with the other altcoins, we see growth with a potential target of 47.5 cents, 52, 56 cents, somewhere around here. This is the most likely target and could even be a stopping point. That's somewhere around 47.5 to 50 cents. The 12-hour candles are pointing upward by all indications. They have a target growth zone around 45 to 46 cents. The 4-hour candles indicate a priority for a decline into this gray zone. This is the area of the huge untraded green candle. And at the same time, it's a potential retest of the 50-period moving average around 42 to 42.5 cents. And the hourly candles clearly point to a decline. And the target level for the decline is about 42 to 43 cents. The lower indicator also points to a decline. Now let's switch to Solana. It suggests that a potential reversal is possible on the weekly candles, and pay attention, it's from the green zone. The potential target for this reversal is $165, and the 50-week moving average is also heading there, while the 100-week moving average is currently at that level. The daily candles also support the continuation of growth at least towards the $149 area from the current $142. And potentially we still have two missed targets. Potentially this could be in the $179 to $189 range. And there is no mention of any short here. The 12-hour candles also indicate a continuation of growth. But here, as you can see, the two nearest targets have already been reached. But there are still two targets that Solana can reach. These are the areas of $151 and $155. The 4-hour candles suggest a decline because here the price was rising while the indicator's highs were falling. This is a typical divergence, and this decline even has a target. Here is the weak mathematical downside target in the area of $133 to $134. The hourly candles also point to a potential decline, at least to this orange target in the area of $141. Although here the indicators show a break. But this break is not happening in the green zone, which means the decline may not be over yet. Let's move on to the next cryptocurrency. That will be UNI. What do we see here? The weekly candles actually signaled a reversal, because the candles that were updating the local lows were not counting this giant drop on October 10th that we had. They were absorbed and we got a bullish engulfing pattern. Although last week it was already bearish, as you can see. But right now, the situation is quite uncertain, though there is still a slight upward bias for UNI. Besides all that, well, the target levels seem to be the 100-week and 50-week moving averages. But as you can see, we've already tested them, but we could go up there again, although that's not necessarily required. Actually, the situation here suggests that after this retest and after last week's bearish engulfing of the previous week's green candle, the downward movement may continue. So here I would even say there's a slight bias toward a decline. Daily candles. Here too the picture is ambiguous. There's no reversal on the lower indicator. It's a sideways trend here, and this sideways movement could very well break downward. So, the situation is ambiguous. You can only look at what other cryptocurrencies are doing, but that doesn't mean one can't move counter to the rest of the market. A specific cryptocurrency could go its own way. For example, the whole market could be rising, but UNI could be declining over a certain period of time. 12-hour candles. Here the trend is upward. We have a sideways movement here, but with two potential growth targets. These targets start at $6.37 and end at $7.10. This doesn't mean that growth will definitely stop at $7.10. It means that this cryptocurrency potentially has a chance to reach those levels. Whether there will be a pause or continued growth at that point is something we'll study in real time. The 4-hour candles indicate a decline. The nearest growth target here was reached, but this one was not. So after a decline, it could potentially reach this target and this one as well. And potentially there was even a light green target around the 7.30 area. On the hourly chart, the situation suggests that the current decline may already be over. It might be, but the 4-hour candles suggest otherwise. They indicate that the decline is likely to continue further. Let's move on to the SUI. On the weekly candles, the situation is uncertain. In other words, you can't say that this is a long position here. And since you can't say it's a long, most likely the trend is continuing, and we should be talking about a continued decline. Another point is that for a retest, we still might go up to the 100-week moving average or somewhere around there. The 50-week moving average as well, but there are no clear indications for that. Moving on to the daily candles, the situation here currently points to continued growth, but it's debatable because here you also see a signal called take, and potentially the movement could reverse in the opposite direction. The 12-hour candles at the moment suggest growth, but with the exact same caveat, here is the take signal, which indicates there are risks of a downward move. The 4-hour candles clearly point to a decline into the area of $1.48, $1.45, $1.42, $1.40. So for now, the picture here looks in favor of a decline. And the hourly candles suggest that a reversal could happen from here, but they contradict the 4-hour candles, which indicate that the decline is just beginning. And when you see such patterns or situations where one time frame contradicts the neighboring one, it's better not to enter the market in these cases. It's better to wait until they are all pointing in the same direction. For example, the hourly, 4-hour, and 12-hour candles should all be indicating either growth or decline together. In other words, there should be no contradiction. And when there are such contradictions, it's better to refrain from making trades. Let's move on to the next cryptocurrency. That will be Render, and we'll finish with it. Weekly candles. The weekly candles suggest a continued decline. The indicator is pointing downward. Yes, there was a strong missed mathematical growth target here, but we've moved very far away from it, so for now I would temporarily forget about it. Daily candles suggest that yes, growth is possible somewhere in the 2.10 to 2.15 range, but the picture here is quite ambiguous. It's very debatable, so I can't really say whether this is growth or a decline. The situation here is ambiguous, and taking the weekly candles into account, they still point more towards a decline. The 12-hour candles at the moment indicate that if we break out of this sideways range upwards, then according to the indicator, we will most likely enter the overbought zone, and on the price chart, we'll end up somewhere around the $2 area. But for that to happen, we need to break out of this current sideways range upwards. If we break it downwards, the trend could reverse, and the daily candles are still not very confident that the growth will continue. The 4-hour candles at the moment are pointing towards a decline. The price is moving down, and the indicator is also pointing down. All the nearest growth targets have already been reached, and there are no reasons to keep rising, at least for now. And the hourly candles are also currently pointing downwards, along with the indicator I mentioned to you. Moreover, the hourly candle from the previous hour closed below all the moving averages. And these suggest that the trend is most likely downward, and we can only start thinking about growth again when we break through all the moving averages to the upside. That would mean a close above $1.80. But that's definitely not the case right now. That's it for our reviews. They were express reviews. They don't claim to be exceptional, but perhaps they'll help you make more thoughtful and accurate decisions. Leave your comments and subscribe to the channel. Our audience is slowly growing, and thank you so much for supporting me with your subscriptions, likes, and comments. See you next time. Goodbye.